So in our last conversation, myself and Shuwel spoke about the power of being in a new environment and what it sounds like to build a successful corporate career, what we learned from different leaders. What we decided to do in this section was talk a bit more about saving, investing, and the different assets that we decided to build out and why we actually decided to do that. So I'm really looking forward to this section because some of you that actually would know us understand that we're very passionate about, developing these vehicles over the long term. So Shuwel, you're in your early 20s and you've got a really good situation. We're working, we've got a good position with the company. We've got two options. We can save to invest or we can spend to enjoy. And so why did we decide to save to invest to create a brighter future for ourselves? But I will say at the same time, there were times where you said to me, P, look, we can do New York every single weekend. Let's make it happen. But that speaks to how tempting it can be when you come from the environments that we come from and then you start earning well. There is a pressure that you may cave into to say, I've never dealt with this kind of money before. One thing I do know culturally, how we're wired, is to spend it. But we went the unconventional route to create unconventional results. So, why was it important for you to save to invest?
It's a great question. I remember we had so many good debates around this topic.
Because you wanted to spend in the beginning.
I was definitely, so up until getting that first full-time contract after our internship, my natural trait was whatever I earned, because I worked from the age of 16 all the way through university, whatever I earned, I would use that to live, right? And even when I was in university, I loved social events, social environments, and also just to make the most of it, right? Then I moved to Switzerland, meet Pabilo, and Pabilo's probably on the opposite end of the spectrum. Where I was the type where, okay, if we're earning well, let's enjoy it. And Pabilo was on the opposite end where he was, if we're earning well, let's try and save even more than I'm earning. So it's like completely opposite ends of the spectrum. And that actually shows you great friendship is when you can connect with people with different and opposite beliefs, but you're able to combine that to make a better combination and also better combined with your friends as well. So to the question about why investing is important. And then again, I think it's also important for the listeners to get some context, right? When both Pabilo and I moved to Switzerland for our internship, the internship contract at that time was probably below average if you compare that versus other contracts around Europe. The permanent offer that we got at the end of the internship, not to disclose figures or anything, but if you look at the best paying graduate jobs in London at that time in 2012, our permanent graduate role offer was probably 3 to 4 times what we would have been offered in London in some of the best industries. So we were already at an advantage in terms of how much we could earn, how much we could save, and how much we could later invest. Now at that time, because I saw the contract, they put it in front of me, I signed it before they changed their mind. And then you start to feel like, hey, wow, like I'm earning a good salary. Even if I wanted to spend it, even if I tried to convince Pabilo and other friends, let's go to New York every weekend. Pabilo was, as mentioned already, he was on the opposite end of the spectrum. But then I did what most 20-plus-year-olds did. With my first bonus check, I bought a Rolex at the age of 22. I bought a Louis Vuitton duffel bag. All of that stuff was done, right? Traveled a bit. And then I realized eventually I can't keep doing this, right? Even if I wanted to, you kind of run out of ideas of what you want to do. And this is where having these great conversations with Pabilo where he had the approach of wanting to save first. And I think the other thing that came into my mind, especially during those first couple of years in my career, was growing up, my dad had his own business. He was in the restaurant industry. And when business is great, like all businesses, when things are going good, it's great.
Yeah.
But when things go tough, unless you have a safety net, whether it's an investment in real estate or stocks or whatever, if things go tough, then it becomes a strain. And at that point, you could have kids, you can have a wife, you can have family members that rely on you. So that always was in the back of my mind. So it just started with having that thought in the back of my mind. Let's just start with an investment. It's something that we both started with actually in a similar case. We decided to opt with real estate. And it's just that habit of saving, investing, and getting that first one as quickly as possible. I think in my case, I bought my first real estate asset in 2014. Yep. I think just before I turned 24. And just getting that first taste as early as you can again, it ignites a lot of
Sets the
ideas
tone.
and opportunities and everything. Now, I've already spoke a bit about my approach at that time. How's your approach at that time as well?
Yeah, it's funny. I mean, I will say before I share my part was seeing your perspective on life helped me to open up more and understand the importance of lifestyle, right? Because otherwise, I think if I was left to my own devices, I would have saved everything and just built an even bigger empire. But I remember asking you one time, I said, if you look back and you'd not traveled to these countries and you'd not flown and you'd saved it all, would you have preferred that? Because you would have more properties, more assets. And you said to me, no, that's not part of the journey. It's not part. So it has to come. I did recognize the lifestyle, but I think the key message is finding the right balance.
Exactly.
And understanding what's a flat rate expense and on-demand expenses. So I think to give the listeners some context, for me, I always just considered saving more cooler than spending. I don't know what it was. And Morgan Housel talks about this in a couple of interviews. He says some people with personal finance, they just get it. And I'm not saying I had the answers earlier on, but I just felt it was cooler as a young boy to have money saved versus spending. I haven't got anything left. I just didn't get, okay, you spend it and you've got trainers or clothes or whatever the case may be, but I've got cash. So I could make the play you've made, but I don't have to. So I think that stuck with me. And what I will say actually, which helped, which is a big lesson on financial literacy, is starting small. So the idea that you're going to be better with money as you make more money is a myth. It's not going to happen. The same habits will show up if you haven't mastered on a small level. So for me, I started the saving practice back in sixth form when we would receive it's called educational maintenance allowance. So depending on how much your parents are earning, you may get a piece from the government. And that was £30 a week for me. So then with that £30 a week, I saved half. I just put 15 aside and spent another 15. And then I remember saving up, and then I spent it all actually on this Italian trip in sixth form. But the point is, I saved. The muscle was there. Did the same thing again at my first internship with Porsche Cards. And so by the time I got to Novartis, this is more than what I thought, but the practice is still going to be the same. So maybe in this case, I can spend a bit more, but I'm still going to save, which worked out to be 45% over the 10 years. And I think for me, when I look back, it's understanding that culturally, from our backgrounds, we haven't done well in being able to create wealth. We haven't done well in being able to understand how to generate income and how to understand how does money work? And so there's this idea, you can decide to be a statistic or you can make a change, you can break the cycle. So I think we were very much into, we've got this opportunity here. We didn't say it to each other, but we said, let's not waste it and make the most of it, right? And so to make this whole thing meaningful, you have to save to invest, right? So that was kind of my journey up towards the contract. And then, but one thing I will say though, I think we've done a really good job to keep a level head, because it's easy to, it's funny, if we were to disclose numbers all throughout our career, people would say, yeah, I would have done the same thing as you guys, would you? Because the habits are the same. And so you would have spent more, lived a much higher lifestyle, and you wouldn't have had as much left. So I think the idea of starting small, paying attention to how much you can keep, is really what it's all about. And then you've got to figure out what your investment vehicle is. We'll come on to that. So yes, I think where we came from matters, and wanting to write a different story was important for us. And then the good thing about it, actually, we could talk a bit about our habits, because I want to ask you, how was you able to maintain it? Once you start, like you said, once you make that first investment, you set the tone. It's now difficult to reverse what you've done because you're now seeing the benefit, right? And so then you just continue. But, what were some of the habits that I think you developed in the first couple of years that allowed you to continue, right? Because saving's one thing. You've then got to figure out how to invest it.
Yeah, I think the habit at the beginning was definitely probably the first year, enjoy it more than save. And for those of you that have known me for a while,
you did it well. You did it well.
Yeah,
one thing I say, you did it well. You did it.
Yeah, I think as we spoke about a bit in the at the beginning, I'd only been to 3 countries, and I think from the age of 21 to 24, while also trying to save and spending money on stupid stuff that I spent money on, I was able to get to like 20 or 30 countries very, very quickly, right? And then through that, I think what Pabilo was saying, and we also traveled together during that time with other friends, you have the memories, the stories, the growth, and then actually getting that out of my system made me realize that, okay, eventually, if I just did this all the time, it would get boring. So it would make sense to start saving, to invest. And then just the habit of whatever you get paid every month, then we got paid on the 25th of every month, which is ingrained in our heads. The day after, okay, how do we allocate this money? And Pabilo's already said like close to half allocate to savings, being in an environment where there are tax efficiencies as well. So this is something that people should consider. And then just getting into that habit where you save before you spend rather than spending anything and then saving whatever you have
100%.
At the end. So that, just to get that momentum. And as we said, just trying to get into that first vehicle as quickly as possible. Now, maybe we can start talking about the real estate in terms of why we picked it as an investment class. But I think getting that taste of that investment, the appreciation, the cash flow, whatever it is, if you can get that sooner than later, then it just keeps the trigger of actually, this feels really good. So instead of saving 20%, let me put in 30% or 40% because now I know what I can do with it. And actually the habit of saving and then spending, what's funny is after probably the first investment that I made, at that point, I thought I knew everything about real estate. I was like 23, 24, bought one real estate asset, which was a family home at the time, rented it out, and I thought I knew everything about real estate. But then it goes to speaking about what we were talking about before, how some of these habits seep through, but having that curiosity, having that humility, actually realizing there's so many bigger ways and better ways of doing what you're trying to do, but just get in the game and then you start to build from there.
I think before we jump into the real estate plays, I think when I think about it now as we're talking, I think one of the most important skills somebody can develop in the first 1 to 3 years is learn how to pay yourself first. If you can figure that part out, because you're setting yourself up for a really brighter future. Because I've now come to learn actually that paying yourself first teaches you how to be a good allocator of capital. But we can talk about that another time. But you just learn how to divide money up and be disciplined enough to not touch that because it has a different purpose. So it can go one or two ways when you're early, and I think it can also go one or two ways when you've got your loans coming in from university, right? And sort of how people spend it, or some people have saved it. So I think paying yourself first fundamentally in the beginning is like one of the most important. And actually there's a book in business that's called Profit First. Same concept. So you carry it through. There's a quick thing that came to mind. I remember when I was onto something, when at my first internship with Porsche, I was making £856 a month. So it wasn't even enough to get taxed. It was national insurance deduction and that was it. And I said, I'm still going to find a way to save as much as I can here because it will put me in a good position for my final year of university. And I remember opening up an ISA account at that time because I heard how it works. Okay, this is a good idea. And I'm saving, but I'm not sure what level. Is it a good level of saving or not? I just want to get to a certain number. And I remember speaking to one of the guys that worked there, and I said to him, I'm trying to open up an ISA account and I've got 5,000 already saved. He looked at me and say, how much? And I thought to myself, if you're reacting that way to me saving that kind of money, I've done something here that is not quite conventional. And so that was like a sign to say, keep doing this because it's going to lead to something. I'm not sure what. And I think it carries through, right? It puts you in a position where you can make an investment, make a play. So I think that paying yourself first, I think it's everything, in the early stages. So for us, we're now saving. We're saving pretty well. Well, let's talk a little bit about the 25th of the month because we enjoyed that day, right? Yeah. So we would get paid, and then I think we would take pride in taking time out to allocate our money, right? And it would be turned into exercise. We would sometimes do it in the evening back at the apartment. But I think that goes to show our financial awareness and our ability to wanting to create and make a difference. But that was a very important part of the month, right? Is being disciplined enough to know, okay, cool, I'm receiving a certain amount of money. The first thing I've got to do is put X aside before I pay anything. Then I start paying my rent. Then I start paying these things. So we only ever lived a fraction of the life that we could have lived, which was good. Otherwise, it would have been something else. So yeah, and I think that was. I'm actually quite proud of the fact that when I look back, every single month we saved. We saved. There wasn't a month that we didn't miss. So just putting it aside, and then it builds up this opportunity for you to go again. So let's talk a little bit about why we decided to go property, because there's different plays you can make. We can go stock market, you can go private insurance, you can go different pension plans, and we decided to go property. And at one point, double down and go further. What was the thesis, high level thinking at the time as to why I'm going to put all my money, which is a capital intensive game, into this?
Yeah, I think the thinking from my side at the time was I'm trying to optimize it at that time for cash flow. As mentioned, when growing up, I saw an entrepreneurial father who worked extremely hard for his family all his life. But then when there were down periods, the strain that could have on the family. So for me, it was really down to security. It was down to cash flow. And I was also looking for something that was relatively risk-free as much as it can be,
lower risk
with regards to an investment asset. So that's why it was pretty straightforward. I invested in an area that I knew well, the city that I grew up in.
Very important.
I had my brothers there. Despite me being abroad, I had my brothers there, a good network of agents, contractors, etc. And it seemed like a pretty straightforward thing to do. And I think at that time, obviously we'd become friends at that time. We had other people around us that were also looking to invest in properties. So I think having that circle of people that are thinking about saving, thinking about investing, looking at different assets, can definitely help spur each other on in a great way as well. So I think those are the three main reasons for me in terms of the security, the cash flow, and it being a low risk investment to start with. But what were yours?
Yeah, I mean, we've got a lot of reasons. We love property for a number of reasons. I think if I start at the very top macro perspective, I think if you're born and raised in the UK and also Australia, there is a certain mindset around owning your own home. I think in those two particular countries around the world, very big on home ownership. So I'd say the seed for me was planted quite early on in, seeing one thing I saw very clearly was what a home done for my mum and us as a family. So we moved into our first 3-bedroom house, and I saw how my mum looked after the house, cared for the house, focused on the house. It meant that we could go to better schools. We stayed at that house for about 10, 11 years. And so the reason why I went property and single family homes first is because I grew up in the business model. I understood it very clearly. If I can provide the exact same experience to other people that what I got with my mum and my brothers and my dad, then surely they will stay for 10, 11, 12 years. So that was, I think you just by association, you understand it. And then the other point that came to mind was, we are earning well, and which may not always last forever. So I think understanding your good earning years, how do you make this meaningful? You make it meaningful by putting to something where you don't lose it. And so it was this whole idea of, if everyone's trading their time for, you're selling your time to a company and you're getting skills back. That's how you should look at it. And you're making a trade. And for me, it was then about make a second trade, because that second trade means that that first trade didn't go to waste later on in life, So it was about making a meaningful trade, and then understanding. I see it more now as opposed to earlier on. Was that real estate is a great protector of capital more so than it makes money. So it's this idea that I've worked, I've been able to pull together some savings. I'm going to put it into a physical asset, and I can rest assured that over the next 10, 15, 20 years, it will not only it will maintain, it will be protected, and also grow in value. And so that I think is, a couple reasons as to why. I mean, there's more also, talking about refinance, not having to sell, it's not a taxable event, and you can access equity. So I think there's a number of reasons. On the cash flow side of things, actually, for me, when I bought the first property when I was 25, I didn't actually know about cash flow. So I didn't understand cash flow was a game in real estate. My thinking was buy 5 for retirement. And at the age of 50, 60, I will have 5 properties in London that are giving me £1,000 a month. Honestly, that was the thinking. So it goes back to your point around, if you can think bigger, you can alter your future. If I get £250 per property, £1,000 a month, that would be good. That would be like a pension, right? And that was how I thought. And so there came a point in time where we just doubled down, right, and understood it. So I like how you mentioned cash flow up front. I didn't realize cash flow I didn't realize it was a cash flow game until much later. And when I did, I said, oh, this is even more powerful because I focused on this appreciation play. By personal name, 10, 15% down, and then the mortgage is being, capital and interest is being paid down over that time. So then when I get to 50, 60, all houses are paid off. That's not how you play the game. So yeah, go on. And any other reasons that as to why property was, because also it remained an attractive asset for you. So you didn't buy your first, second, and then switch. What kept you going? Because at one point you doubled down. At one point you said, I need to go all in on this asset class. Why?
Yeah, it's a great question. I'd love to get your take on it as well, because I think when I bought that first one at 24, as already mentioned, I had one and I thought I was like the real estate guru of the world. And then afterwards I realized, mate, there's still so much to learn. Even now, there's still so much to learn, right?
Of course.
And to that target that Pabilo had, I think the target that I had was to have 4 properties by the time I was 30. Right. And at that time, that seemed like a stretch goal. Right. And then by the time we get to 30, I think I had like 10 units maybe at that time. And Pabilo was probably in that range. So we'd already shot past that. And then by the time we got to that age, we realized we can get to like hundreds if we wanted to. And then the scale started to come, and we'll probably talk about that later. But in terms of why I wanted to double down, so I bought a few first under my personal name. And then you get that feeling of, okay, the cash flow, like I'm working in this great company, learning, developing, being able to save some money and invest. But then this money that I'm getting from my investments, I haven't had to put 40, 50 hours into it. Like this is naturally just coming in because we've bought well in demand places where people are looking to rent homes in a country where there is demand for good quality homes as well. So we are serving a purpose in that sense. So then combine that, after you get that feeling of a few of it coming in, then you start to think, okay, how do we double down? How do we scale? And then that's where, the humility comes in, where you start to take the learnings from working in a large company and you apply that in the other vehicles that you have personally or in an investment world. And then you start to think, actually, do you know what? Maybe there is a better way to do this. Maybe there are ways to learn about this. Maybe there are people out there that have been able to acquire and invest a lot more with a lot less than that I have.
Yes.
And then that's where we started to transition into the phase of, okay, if we're already getting the benefits that we're gaining from this from a few investments, and if we were to really double down and scale with something that is actually working, then let's do that. Let's try and find people who are already in the space that are doing it. So, and before we go into those specific things of that particular journey, how was that transition for you in terms of deciding to double down and focus on this versus stocks? And Olu, if you're watching or listening to this, nothing against stocks.
No, it has its benefits.
But what made you want to double down?
I mean, my experience with buying that first piece of property was, in your personal name, you put down a deposit, and then you're paying down the mortgage and the interest over that 30-year period. But that business model doesn't make as much money each month. And so I bought that one, and then I decided to actually look at something else, which was a private pension plan. But here I was actually putting money into a plan every month, right? So on one asset, I was getting paid, not a lot, but I was getting paid. And then the second one, I was putting money into with this hope that it would compound extremely well over a 20, 30-year period. And it was all focused on this end 50, 60 year. When I'm 50 and 60, I'll have a lump sum to cash out, have a property, maybe a couple others that I can actually then benefit from. And it was, quite frankly, it was too slow. Perhaps it was like I had broken the cycle of, okay, I'm investing now, but now you're looking for more in your investment. So I think a lot of times what drives change is pain. And so when I dived into property more, it came from a result of being burnt out around 2018. And I just remember, walking home 11 at PM at night, heading home, thinking to myself, it's okay because Lauren's at home, but I can't do this when I start having children. So I was already thinking that way. And so I need to find an option. I need to find something that creates additional income stream, additional cash flow. What can I do? And then I actually learned about, interest only mortgages, which creates, gives you more cash flow each month, higher yields, 25% down. And then it was like, okay, this is a game that I can see working out over a period of time. And that was where the mind switched to saying, okay, let's get educated, which we did. Understanding, one, it was possible to actually buy properties from being overseas and develop systems to be able to build that well. And then you could just start doing the numbers, right? If I buy a number of interest-only mortgages on properties on a buy-to-let, this is what I can look forward to maybe at this point in time. So I think for me, it was doubling down on an asset class that I'd already started in, didn't know too much about, as in well enough, but came from a result of pain and realizing that I need to make a change. And so I actually sold the private investment plan. I went through quite a challenge to get out of that because they want to keep your money in. Got rid of that and said I'm going to double down on an asset class that pays me every month. I'm not going to in the early part of my career focus on putting money into something which I have to look forward to at a later stage. So my mindset was very much I just need cash flow, it coming to me, and then I can then use it at a later stage. So I think that was I think it was a case of I think the great thing about when you figured out what your asset class is, you can just double down. You're not then distracted by other shiny objects because there's so many different options that you can take. And so what was good is that you just focus on an area, like you said, you just pay attention to supply and demand, and then you just continue siphoning money from your job into that business, into that model. And then before you know it, you take, small steps lead to something which is quite meaningful. So that was probably my story and transition into saying I need to, start building out. And then as you go along, you realize there's better ways to do it, right? We can come onto it, raising finance, you can then start to look at accumulating more units. But the idea of having 5 and finishing off with 5 quickly became a myth or it wasn't my reality once you start getting educated. And I think that was the power of education.
So on that education component, I think both of us, I think probably between us have around that time over a couple of years spent maybe £20,000 each on learning on how to do it properly, meeting other people in that space and how they were doing it effectively and efficiently as well. What were the first learnings or the learnings that have made the most impact for you during that?
The first one was it's possible. I think going back to what you said about that leader telling you, I can see you achieving way more than you can see for yourself. The very first thing was just knowing it's possible. Because once you understand it's possible, then you're taking the first step in understanding I can actually take action and make this happen. So I think that was the first thing. And then I think seeing examples. You have to see examples of people, because we worked in an environment whereby people had built successful corporate careers. We were looking at how to build a successful property portfolio. And so you're not going to find those answers within the corporate space. And so just seeing different examples of people that have built their portfolios, the benefits it's given them, more time, choice, how they've been able to create wealth. And then you start thinking about the macro perspectives of culturally how we're wired and then seeing the difference. So for me, the biggest takeaway was really, when you walk away from these events, it's a mindset shift more than anything. Mm-hmm. The tools, the tactics come as you go when you start diving into it. But ultimately, the mindset gets shifted to, it's possible, even for me. And that was a big thing. I've seen if he can do it, he doesn't even look anywhere. He hasn't had the same background or sort of careers. I feel like I'm in a much more privileged and blessed position. I can definitely do it. I just need to apply myself. So I think more than anything, like tactics, because obviously you learn about how refinancing works and the power, interest rates dictate the market and these kind of components. It's tactics. The mindset shift was what it was all about. Because like I said to you, I didn't know about cash flow with property. It was a case of you buy a piece of property, you pay down the mortgage and the interest so that you own it free and clear in 30 years' time. How about you? What was there was tons of lessons in these education plays, but what was and I think for us in particular, it was not only is it possible to build, but possible to build 1,000 miles away being in Switzerland. So someone would have easily said, I can't do it, I'm abroad. But we found a way, and it's about mindset shift, finding a way, because it is possible.
Yeah, and I think it during that period, it really also emphasized, and to be very clear, and you speak about it all the time, being very clear on why you're trying to do it. Like you gave that example of coming back from the office in 2018 and it was late and thinking, okay, how can I manage this with a family in the future? I think for me it was, and we've spoken already about the company, the leaders, where the people that we've worked with, what we worked on. It was a great environment. But But then there are pockets of times where you're maybe in a role that you may not be interested in, or you might be in a team that you don't really want to be part of, or you may be working for a leader that you're not interested in as well. Actually, having this financial security and independence outside of your career allows you to bring a better and bigger self to whichever your main vehicle is as well.
Yeah.
And I think over time I realized actually the more I in a polarity way, the more I end up investing outside and having more security outside of my career, the better I ended up performing in my career as well. And actually seeing that pattern made me think, okay, if I really want to have a better career and flourish even more, then it's important to have that financial independence through these investments. And I think the trainings that we provided, we're a big advocate of putting money to develop ourselves.
Yeah.
And at that time, maybe spending a few £1,000s was actually a lot of money for us at the time to invest in something in our own education. But I think that education led to us, as Pabilo has said, being exposed to people, ideas, ways of working. And then naturally that's led to the expansion in terms of what we've been trying to do as well.
What's your take on in investing in yourself from a standpoint of, I'm going to put 10, 15, 20,000 pounds, even more, right, into myself? You have such a huge appetite to do that, right? And for the listeners listening, this is an individual that has attended Cambridge to study an MBA, and also taken it one step further and decided to do the unthinkable, completely unconventional, and actually has been accepted into a place in Harvard. And so Shuwel can talk a little bit about those opportunities, but that all comes down to the one theme and thesis. I am committed to investing in myself. And so for you, what is it? Why do you keep doing it? Why is it attractive? Why do we see that as our ticket to high levels of success?
So I think what we saw in a large company, again, it's a $200 billion market cap company, right?
Yeah.
And Apple's of the world's trillions, Microsoft trillions, Nvidia, all these companies. In all these companies, going back to the point that Pabilo said earlier, there's a P&L, and a big item is the research and development.
Yes.
And these companies would spend billions and trillions on employees, on IP, on the company.
Yeah.
And the more they invest, the higher the top line grows. Again, another great point Pabilo made earlier. So if we see that approach with the companies that we're in, I think for both of us, it flicked a switch in our minds where if the company is investing so much money in itself and also in us, we went to some great training programs, we're able to travel across the world to be developed as leaders, then why don't we take that approach with our own investment and personal circumstances as well? So I think having that approach opened our eyes up to let's invest in our education, to learn about real estate, to learn about other areas. I think for both of us, the pattern is clear. The more we invested in ourselves, the better the results. And the better the results, the better outcomes for everyone around us. So if you see that pattern and that trend, you've seen it in large companies, you've already seen it in yourself in whichever journey that you're on, then it makes sense to double down on what's working well. So then off the back of that, I kept that same philosophy. We've invested in other courses and education elements and other masterminds, whether it's formal environments or informal environments. But the pattern is obvious and it's clear, right? The more that we invest in ourselves, the more we end up having, and then the better outcomes for everyone around us. And for anyone out there who's maybe on the fence about spending money or investing in themselves, think about how much you spent on holidays, think about how much you spent on great meals, think about how much you spent on lots of different things, right? And then ask yourself, how much have you spent on yourself? And if that figure is leaning one way more than the other, and the outcomes are also leaning one way more than the other, then really think about where you can invest that. And I think that's why real estate has been a great vehicle for us. If we didn't invest that 20,000, 40,000 combined, then it probably would have cost us tens of thousands of failures, mistakes, wrong decisions to get to where we got. So exactly as you said, we're paying for the time and to get to the end goal quicker.
Yeah, but maybe a little bit around what's your thinking now, because that speaks to how the evolution of our skill set has come. So what are the kind of projects you're working on now? How do you think about property differently? I certainly have had a couple mindset shifts recently, especially one around raising finance. Given how long it used to take me to save money, yes, that's good, but then there's a faster way to get to your end goal. So maybe talk a little bit about the properties that the projects you're working on now, and why not stick with what you had? What's the thinking?
Yeah, so at the beginning it was just buy the first one. Yeah, bought the first one and thought I knew everything. Yeah. Then while I was in Japan, I bought the second one. And that was already, okay, I'm in another country on with a different time zone, but then that kind of helped develop in terms of, okay, you don't need to be in the same place. Then we did a few more, and then we did the training, and then we learned, okay, actually systems, processes, all of this stuff. I think now the way that it's transitioned is both of us have embarked on a journey of raising finance.
Yeah.
I started probably a couple of years ago to raise the first finance for a project at that time. Now I'm actually really proud to say that I've raised more than 1.4 million,
Yeah,
which
incredible.
a few years ago would have seemed crazy. And we've spoken about it. There's no better feeling. Okay, raising money is great, right? But allocating that to bigger projects, so
Yeah.
we've transitioned from buy-to-lets to HMOs to blocks of flats. There's no better feeling. A, raising the money feels great. B, finding the deal, doing the deal feels even better. But there's no better feeling going back to the investors, especially the ones that we worked with at the beginning, and give them the funds that they
Return on capital
offered
plus
the return.
Plus the return.
And then turn around and be like, look, thank you so much, really appreciate it. I'm going to go do great things with this capital with my family.
Yes.
Or they turn around and say, okay, look, because this works so well, I'm happy to reinvest. What projects are you working on? Tell me what you're doing. Let's keep that relationship going. There's no better feeling than getting to that final stage. So I think for both of us, starting small, getting the basics, investing in that education, to then with each now milestone going bigger and bigger and bigger, has allowed us to be in the position that we're in today, where we have the freedom to record this podcast on an afternoon.
Yeah, very true. Yeah,
or
very
episode
true.
or whatever you want to call it.
Very
but it's
true.
given us the freedom, actually, and that in itself is worth something, which we'll probably speak about in the next section. But I know you've also evolved on your journey. You mentioned about the raising finance. I know you're looking at bigger projects, planning permission, all these things, right?
Yeah.
All the fun stuff. But how has that journey been for you?
I think what makes this journey is understanding that it's really about skill set. So you start off, with the first property, you take the first step, as you mentioned, and then the real question you're asking yourself is, how can I upgrade my skill set over time? And then now it's about, how can I provide a better service? Because in the first couple of deals, it's about buying for myself. I use my own money, buy my own deal. My own money, buy my own deal. Then you start helping family members also buy their deals. So you start to open up your offering and your service, and then it's like understanding real estate is a financing game, and it's you can play a better value proposition game. So understanding what rates are out there and what banks offer, I can actually provide a much more value to an individual, people that I know, because of the deals that I'm actually looking at. And so if the deal will allow it, then it actually makes sense to allocate capital to this and provide you with a return. And so not everyone will take that calculated risk. Not everyone is in the position that we're in. And so you're uniquely positioned to raise capital the right way, put it to work, be a custodian, and then pay that capital back. So for me, it's great. Like, it's just, I think sometimes you get impatient about wanting to get to things much faster, but the process is the process. You are where you are for that particular reason, And so it's just kind of committing, staying with it, understanding that keep taking your relevant steps. And also in the property game, it's valuable to have a number of assets before you jump into maybe a bigger place, right? Because lenders look at that as well in terms of your level of experience. So I think for me, I'm really excited now to embark on this next phase of growing the portfolio, and then there'll be more to come, right? And I think it's just a natural evolution of investors that play it smart and stay in the market long enough, right? This is a 20, 30, 40-year career that we're looking to build here. It's not a 5-year career and then that's it. So yeah, I think it's just trying to figure out more of what you don't know, and really about skill set and service. That's the focus. And what's great about it now is I'm able to provide a service to people beyond just building a portfolio for myself and my family. So yeah, that's kind of the thinking.
I think those two words that you mentioned, Pabilo, about skill set and service, I think those are things that are super important, but then can also be applied. I mean, we've taken lessons that we've talked about in our career and how we've applied that in our real estate ventures. But then those lessons of skill set and service can also be applied to other areas, right? And then I think everything that we're learning, developing, skill set, all of that stuff, what we're applying now in real estate can also be applied to much bigger vehicles as well. So there's always this ongoing journey.
Correct.
Again, keeping that mindset of we're always learning, always developing, not thinking everything can actually make us go
and,
far.
and I think the other thing also is the last point I mentioned is we understand the state of the UK market in terms of you have some landlords that are not necessarily meeting the criteria that they need to provide the optimal accommodation. We're passionate about providing the right accommodation, the right quality for the right tenant at the right price point. And so when you believe that you can make a difference, yes, for investors, for yourself, but it's also about how can I change the market? How can I improve the quality of this particular market? So I think myself, you, other people that we know also in the space are better positioned to continue growing, accumulating more rental units because we can provide a better service. And I think you can see it. You can see it in the marketplace. You can see it in the way that we actually service our tenants. So that's also something that I'm also looking forward to, right? Is having that responsibility and now bringing on investors to actually create a community and making a difference. And at the end, when it's all said and done, I think for us, we want to look back and say, we put way better quality, rooms, homes out there in the marketplace that people were able to live, grow, and have a life within. So that's the thinking.
So this has been a great discussion. I've learned a lot as well, and it's always important to relearn things. You can never always learn things once, and that's it. It's in the chamber forever. It's good to kind of get refreshers and understand what's going on, what's been done, and we've had a great discussion here around the investing. So for those of you who watched the previous section when we spoke about careers, now obviously we've spoken about investments, and I guess the last and most important topic is a combination of the two, actually. Career versus financial independence.
Yeah.
What's the most important and what are the pros and cons? So let's get into the meaty stuff.
Yeah.